Hi, gang. It's Kurt Frankenberg again with Radioactive Trading, and I'm here at the office to tell you about the what happened with the research emotion trade just a few days ago. And I've got a new challenge to issue that you'll see in a separate video. Okay, right now let's go ahead and take a look. This is what happened with my live trading dare. Okay, I had been in research in motion. My challenge was that research in motion, the way that I was trading it, or the way that I trade any stock, is way better than doing covered calls or trading long calls. Okay, so what I did was get into research in motion, which crashed. But that showed that my way is better, okay? And I have an even better challenge, and I'll get that to you. But first, here's research in motion crash. I got in at this point over here at $75.40, but of course at the same time picked up long put options far out in time and in the money in order to protect myself. Now, research motion did fall down below its 50-day and 200-day moving average. Okay, so it's down there in the doldrums. And here was my setup. I had bought the shares of stock at 75.40. I had also bought the September 2010 $85 put option for 13.95. That makes my total investment 89.35, but I'm guaranteed to be able to get out at the $85 strike price, right? So 435 is my at-risk amount. Now I want you to remember that number, $4.35. Okay, that's the most that I could have lost. Now, I did exit. Research Emotion crashed, and I was able to sell my stock and my puts separately and bring in $87.06. So my actual loss was $2.29. $2.29. Okay, if you'll take a look here, this is the record that we keep at Radioactive Trading of all of my trades, win, lose, or draw. My radioactive profit machine returned a negative 2.6%. Okay, so I lost 2.6%. Had it been only stock, I would have lost 9.2%. Now, I'll have folks argue with me and they'll say, well, geez, trading a covered call is a better way to go. Well, is that so? My radioactive profit machine only lost me 2.6%. Had I been trading the stock, I would have lost 9.2%. If I had been trading a covered call on the same day, that would have brought me in $2 of income and reduced the cost basis of the stock itself. So that would have reduced the cost. Reducing the cost basis makes for a better percent return. Okay, but the fact is that you still would have lost 4.68%. And did I mention that research in motion went down even from there? Okay, now a long call would have done even worse. Let's take a look at this. If we had gotten an in the money call like a lot of folks do, we would have paid 16.50. By April 1st when I got out, it would have been worth 8.80. Okay, if we had bought at the money, the September 75s, it would have cost 8.45. By April 1st, it would have been a $4.40 value. Okay, and if we had gotten into the September $85 long calls, which is supposed to be the synthetic equivalent of the trade that I did, well, our losses there would have been $4.80. Now remember, I only had at risk $4.35, and I ended up losing only $2 and change. Okay, so it wasn't really an equivalent trade, was it? Not dollar amount, and certainly not percentage wise. You see, if we had invested in the 65s, our loss would have been 45%. The 75s would have been a 53% loss. If we'd invested in the September 85s, that would have been a more than 70% loss. Did I mention that my loss was only 2.6%? Did I mention that it was a lower dollar amount than any of those that we just looked at? If I didn't, let me remind you now. Okay? And the challenge that I have to offer is that Cree, the company that I'm in now, is bulletproof. If you'd like to take a look at why, take a look at the next video. RadioactiveTrading.com, the live trading dare.